Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. We're speaking with John Kaiser. John, welcome back to the show.
Hey, it's good to be back, Jim.
John, last Friday, Scandium International announced that it received a mining lease for its Nyngan Scandium project in New South Wales, Australia. The stock bumped up on Friday, but has gone quiet. What's next for Scandium International?
Getting the mining lease was a very important milestone for Scandium International. It is the first mining lease for a primary scalable scandium mine in the world that is going to be operated on a profitable basis. The only primary standalone mine was the Zoftivody that operated in the 60s and 70s in the Ukraine. It was an underground mine that the Soviets, they mined the scandium because they needed scandium for their military, and as soon as the Soviet Union collapsed, so did that mining operation, and it is now a flooded mine. Those seams were 100 ppm, 150 ppm. The stuff in New South Wales is 300 ppm or better. There's a number of deposits at various stages of exploration. Nyngan is the first one to get a mining lease. So this was a very important day. Now, you might have thought the stock should have charged a lot higher as the company gets ready to raise $100 million needed to put this into production. But there is still one important milestone that needs to happen. There's a 20% project partner called Scandium Investments LLC, which now has 30 business days to decide whether it will fund its share of the capex for its 20% interest, or negotiate with management to convert that 20% project interest into an equity stake. And it's about June 15th is when I estimate they will need to make a decision. So they can either choose to treat this as an annuity. They've got $2.5 million into it already when they enabled Scandium International to salvage the problem back in 2014. They can put another $20 million in and sit back and wait for the next sort of 3 years or so for the dividends to come in, or they can convert it into an equity stake. And if you do a sort of pro rata analysis and acknowledge that most of Scandium International's market cap resides in the Nyngan and Honey Bugle project, in which this still has a 20% interest, then you could say, okay, well, then they should get about 25% of the existing shares, so they end up with just around 20% or so of the resulting shares outstanding, with Scandium International owning 100%. So what they plan to do, I do not know. I know that the decision to make a stay with 20%, if that's the decision they've made, they would have already notified management because it's time to get on with raising the money. Because it needs to be negotiated, the exact terms as to what to price the 20% interest, that will take a little longer. It's been now, a week, and we have not heard anything, so I'm optimistic that the decision is shifting towards the principles behind Scandium Investments, LLC becoming equity holders in the company, and if it's on the terms that I expect, they would become by far the largest shareholder in the company, which means that the destiny of the company also shifts to a large degree into its hands. And since this is a very successful family with deep connections and the ability to raise an awful lot of money, the day we get news that they are on board is the day I think the stock will finally get going and the company can get serious about raising $100 million. So any time between now and June 15th.
Arizona Silver published a news release about its Ramsey Silver project in Arizona that was frankly full of geological gibberish, but the stock went up anyway. Can you translate the news for us?
Well, a few weeks ago when we introduced Arizona Silver and its Ramsey project, I explained that they had acquired 100% of a former small-scale mine, very high-grade, one of those 30 ounce per ton silver veins that the old-timers had mined. And there wasn't a huge amount of tonnage left, but what the company had come up with was a hypothesis that this fault that cuts off the system to the north. They did geophysics in the general area, and the geophysics lit up a structure in an area covered by gravel, which, as we joked about, this is where all the snowbirds bomb around in their all-terrain vehicles when they get tired of sitting in their recreational vehicles in this region, which is a popular destination for that snowbird crowd. They hypothesized that the system has been downdropped and displaced somewhat to the northeast, but is a continuation of the Ramsey vein system with, in my estimate, potential for, 40 to 60 million tons of material close enough to surface to be open pit mined. So the news release they put out was basically a geological description of the rock types and the sort of mineralization that we have. There are no grades in it, but the description fits very well what they see in the Ramsey mine situation. We will have to see some assays to see if the silver grade is indeed as high as it was at Ramsey, and also most importantly, we need to see that the wall rock surrounding the contact where the vein is located has a reasonable zonation where the silver grade fades out gradually rather than abruptly, so that we have a bulk tonnage mining situation. The goal is to come up with a sort of average 3 to 4 gram per ton silver grade, and then of course it all needs to be reasonably continuous to lend itself to open pit mining without hideous waste to ore strip ratios. So the stock has responded well because the market is doing that classic thing of, okay, we see the structure, we see the style of mineralization, we can do back-of-the-napkin calculations that if we connect all the dots, we should come up with such and such tonnage, and now we need the grade. What is the grade going to be? And that will take a few weeks, and next week I'm going to be visiting the project on a site visit to get a closer look at the geological context and the local region. So cross your fingers that we get assays that support what was seen in the Ramsey mine area.
Discovery Watch with John Kaiser will be back right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. John, at the Metals Investors Forum last weekend, Atamira Minerals attracted a lot of attention. Are they any closer to a discovery?
Atamira Minerals has received multiple permits from the Washington permitting body to enable it to drill quite a few of its geophysical targets that it has generated on its Cook Mountain project, including the Big Banana target. The company has been cash challenged. They did manage to get up to $1 million or so from getting warrants exercised. They had made a decision back in February, instead of doing another dilutionary financing, to try and get these warrants exercised and the money in the door, and not have these optionality on the future success of the company hanging over the market. And they had sponsored an advertorial that Eric Coffin wrote, which we talked about, that sort of breathless type of many pages of here's why this company is so great. And this advertorial was mass marketed. It reached a large audience. It resonated with this audience. It enabled the stock ended up trading above 20 cents for the number of days needed to trigger the acceleration of about 11 million warrants that would expire sometime between now and the end of the year at 10 cents. So basically they have a double. The stock is weakening at the moment because obviously some of these warrant holders will need to sell some stock in order to exercise their warrants. They'll have about 30 days to do this. In the meantime, the company could get as another $1.1 million. There's a 3,000-meter drill program getting underway, which will start testing these various deposits or targets. And with this extra money in the door, the company will be in excellent shape to do follow-up drilling if any of these targets deliver gold mineralization that supports the hypothesis that they have, chances to find sort of 500,000 to million-ounce deposits grading in that 4 to 10 gram per ton range that other deposits have been mined for in this region. So good news for Adamara Minerals, probably a bit of a, lack of enthusiasm amongst investors that this warrant exercise has to be digested at the moment. But with another batch of warrants out of the way, this company will be in excellent shape to deliver a discovery between now and the end of the year.
Diamonds have been on the news recently, with Mountain Province providing much lower guidance for Gaucho Quay production than the feasibility study projected. Is this helping or hurting diamond juniors such as crystal explorations, which you have flagged for Discovery Watch?
Well, the big disappointment with De Beers and Mountain Province with regards to his Gaucho Quay deposit is that they have now started producing from the primary part of the 5034 pipe. Earlier results had they've been getting the grade that has been projected. There's no question about that, but they got lower values than had been modeled. Now, the interesting thing with the Gaucho Quay project is that the diamonds in general are not that good, but they periodically have some real zingers in there, such as this 25-carat diamond that they had that was worth $250,000 or so. So if you had took the 10,000 carats that they got from all those bulk samples that they took since sort of 1994, 95 when the pipes were discovered, and just divided the carat value by the number of carats that it came from, you would get some price like over $200 per carat. Now, the WWW organization that does modeling, it had modeled a range, and the range was something like $110 to $210 per carat, and but it had come up with a base case price of $120 per carat, which I find kind of peculiar because that was at the lower end. Other deposits like Shore Gold's Star deposit in Saskatchewan, it has also a similar range, but the base case is modeled more at the upper end. Similar with Peregrine's Chidliak deposit, the base case is chosen at the upper end. So okay, they're being conservative. Well, the bad news that came out about a week and a half ago when the company reported on its results was that it was expecting for the rest of the year, when it is now mining the normal part of the pipe rather than this stuff near surface as the pit gets into the kimberlite, they're expecting $70 to $90 per carat for the rest of the year. And that has helped the stock from a being high of $7 not too long ago down to just under $4. And the company is obviously not getting the cash flow that is expected, so it's getting cash calls. So it is a bit under pressure. And so this is a bit of a pall hanging over the market. And it can't just be blamed on the fact that in India they eliminated all the small bills and killed the market for the smallish diamonds. What seems to be the case is that Gaucho Quay is not delivering the large diamonds that everybody is counting on to give us something, to give us a carat value at the upper end of the modeled range, and one in line with the measured value of the entire bulk sample. Now, with regard to companies like Crystal Explorations, a reason that it has managed to get traction is it has picked up projects in that area of the Jericho pipe. It has title to the muskox deposit that De Beers at one point had. And Jericho, of course, was a mine that crashed and burned, but it's not clear that this was really a problem with the diamond content. It was more likely a problem with the technology used to recover diamonds. The interesting thing about this area is that it had coughed up 40-carat stones. They weren't fantastic stones, but during exploration stage, large stones had shown up in the bulk samples. And part of the big wave right now, while diamonds in general are still suffering, there is still strong interest in the large, high-quality diamonds, especially these Type 2A diamonds that are coming out of Africa, such as Lucara's Caro pipe. These diamonds continue to command a strong appetite in the market. And the focus for crystal explorations is to revisit some of these known pipes in this area north of Lac de Gras and see if there is potential for higher quality diamonds that are not going to show up until you do larger bulk samples, which requires a fair amount of capital. The company just announced a 10 million unit financing at 10 cents with a half warrant. They've done a number of financings at this price, so they've been sort of stuck in a little bit of a dilution treadmill. But I talked to the CEO, Jim Gregg, recently, and he says this is the last financing that we're going to need to do for the next 12 months. The money will go towards testing 6 new targets rather than spending more money on bulk samples, which requires you to have a $4 or $5 million budget. We're going to go in there and test new targets that were overlooked in the past when Ashton and De Beers and Rio Tinto went through this region. Some of them did indicator mineral sampling. Others, such as Ashton, whose Argyle pipe taught them not to pay attention to chemistry too much, and they just drilled geophysical targets and test them for microdiamonds, and if diamonds are in it, they ran with them. Well, in that first wave of exploration, targets that were either very subtle or lacked any sort of indicator mineral train support, they were not explored. And so what the Crystal Exploration Group has done is gone in there and gone through all the old geophysical data and picked areas where there looked potential for kimberlite pipes and did ground geophysics surveys over that. And they had sort of 70 or so original targets. They've got a couple dozen left. They've prioritized 6 of these for drilling. So starting in the summer, they will go in there and drill these targets in the hope of finding brand new pipes. Again, you never know at this point whether or not they're going to be diamondiferous or to what degree, but their first shot at sort of getting the market's attention is to demonstrate that new pipes remain to be found. But their spin is that we're rethinking this area in terms of its large diamond potential. We don't want another high-grade, 200 CPHT pipe with relatively low-value diamonds. We want a pipe that has the high-quality diamonds that continue to command the public's interest. And there's another company, North Arrow Minerals, which is Ira Thomas's company. They just raised $5 million at 25 cents. Yes, another big chunk of dilution, 20 million units at 25 cents. 2 million came from Ross Beatty. 2 million came from Tom Kaplan, his Electrum fund. Both look like thank yous to IRA for doing such a wonderful job with Kaminak, which Goldcorp bought out last year for around $3.50 a share. Their project focus is Naujat. Again, it's a very low-grade pipe, a large pipe. The apparent quality of the diamonds is abysmally low, but it has all these unusual yellow colors. Most people don't like yellow colors, but there is a type of fancy yellow which does command a market, and they are also looking at this thing to see if they can get bulk sampling to a scale large enough to tease out evidence proof that these very high value diamonds are present. And then it becomes a story like the Caro pipe. Lucara, where the diamonds where it was a low-grade system, and what you found at first wasn't very interesting. But then when you go to commercial scale, you end up getting large, high-value diamonds. So we'll see where that goes to. Both North Arrow and Crystal Exploration are both groups that continue to tackle Nunavut and the Northwest Territories in search of both new pipes and revisiting these old systems for their high-value diamond potential.
Coming up, John Kaiser's closing comments.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
John, do you have any new Discovery Watch candidates for our listeners?
Well, last week I mentioned that Azimuth Exploration came up with some interesting results on its Eleanor South project, where it's drilling the southern half of the Chichu intrusion. The results look promising, but they still don't really hang together to really make you think this is going to be a winner. This week, Sirius Resources announced partial results from some of the targets it drilled on the northern half of the Chichu intrusion, and there were some good numbers in that too. But again, nothing to really give you the sense that this deposit, that there is a deposit here that simply needs to be drilled off and turned into a mine. But the project that I want to put Discovery Watch attention on is a joint venture between Sirius Resources and Sphinx Resources. And the new Discovery Watch company is Sphinx Resources. These two companies have a 50-50 joint venture on a 30-kilometer by 5-kilometer package of claims between north of the Eleanor deposit. And what they have basically done is drawn a line on what they see as some sort of regional structure, a trend that's been the sort of the locus for emplacement of gold systems. And the strategy they devised is that let's map stake this set of claims on top of that, and then do a till sampling program down ice from it, a big line along that whole 30-kilometer stretch, and see if we get any gold kicks in there supporting this idea that there is some sort of structural control at work here. And this is not going to deliver a discovery this year. They are still getting back the till samples. They will go back in there and do some up ice till sampling and some groundwork to prioritize the targets. So what we're waiting for is news that they have gold in the till supporting their hypothesis that there is a structural trend with multiple gold systems along there. And that won't get confirmation really until 2018. But Sphinx Resources, it is a quality group. It's the survivor of the Donner Minerals that was the dominant player in the South Voisey's Bay play back in 95 to 2000. They raised a lot of money. They found sniffs of nickel in that area. Then that crashed and burned, and they never did find enough to be another Voisey. They reorganized. They took on the Brace-McLeod zinc deposit with Falconbridge originally, and then Extrata, and then they went to put that into production. And in the end, they got crushed in that post-2008 market when they couldn't meet the cash calls, and they end up losing it. Sphinx is the reorganized company. The only person there who's sort of back from the old South Voisey's Bay days is Kerry Sparks, who was involved in the Voisey's Bay exploration. But the new people are like Normand Champagne and Michel Gauthier. They've assembled a new collection of prospects like Calamute Sud and Green Palladium, both of them near that, in the Quebec side, near Ottawa. They've got small drill programs with results pending. One is a VMS zinc play, the Calamute Sud. In the other Green Palladium, there is a reef that bears platinum group elements. They need to demonstrate that there is a decent platinum group, palladium, platinum, and gold within these reefs, so that this could become an underground mine. And they've got several other projects like Chemin Trolles, where they see a gold corridor that they're going to explore. So top-notch team. There's a lot of stock outstanding. They had to bite the bullet and do cheap financings below 10 cents. So again, it's kind of like an Adamera. Good stories, good people, some big district scale potential in the Chichu-Eleanor Trend project, and one where you have multiple shots at success. And so there, Sphinx Resources is our new Discovery Watch candidate.
John, thanks for the update.
You're welcome, Jim.
My guest has been John Kaiser. His website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.